Hi everyone, good morning and welcome to today's morning report on Friday the 14th of November with me, Rich Perry, market analyst at Handtech Markets. The European trading session has started slightly negatively, trading on the DAX and FTSE slightly down, but the CAC's up very mildly, and that's sort of reflecting the GDP numbers that we've had out of the Eurozone today. Germany was in line with expectations at plus 0.1% for the quarter, Q3. France actually beat expectations, coming in at plus 0.3% above the 0.1% expected. Literally in the last couple of minutes, we've also had the Italian GDP data that has basically come in line at minus 0.1, so still in negative territory there in Italy. Basically, the takeaway from this is that it's a mildly positive set of data that we're having in front of the Eurozone-wide data that we've got at 10 o'clock. The expectation for the Eurozone is plus 0.1, which I'll show you now there. That's the Eurozone data over the past few years, and it's expected to just stay above zero. It looks like that number's going to be achieved as well, certainly if all these big if the data out of these big countries of the Eurozone is anything to go by. Markets have basically been waiting for this GDP data out of the Eurozone all week. This consolidation throughout the currencies, well, certainly the Euro, it's basically been flat all week. Also, DAX and CAC have basically also flatlined as well. So there's no real move on the back of this data quite yet, and I don't think, bearing in mind that we've got the Eurozone data out at 10 o'clock, it looks like the market's sort of priced all of this movement in at the moment. So with that in mind, the markets have slightly actually started to come off, and it may be that this data coming in line with expectations is maybe giving traders a bit of a chance to sell on some of these indices anyway. So I mean, DAX is actually just coming back towards flatline now, but I mean it's sort of in line, and markets are basically flat, not really doing a great deal at all. Euro slightly reacted higher, but I'll talk about that in the Eurozone, in the euro dollar chart in a bit. But what we're seeing today is basically flatlining. So we've got other data out today. We've got the US data this afternoon, finally coming in after about 4 days of nothing out of the States, really, apart from maybe a bit of weekly jobs claims yesterday. We've got the retail sales for the States, and retail sales dipped below last month. It dipped below zero for the first time on the month in this year, and that basically is expected to turn around again. Basically, it's expected to come in at plus 0.2% on the month, which would be a more of a positive number, certainly. And that's at 1:30. Then later on the afternoon at 2:55 UK time, we've got the Michigan sentiment. The first preliminary reading of that data, that's expected to come in at 87.5, so continuing to improve there on the Michigan sentiment. So the data out of the States this afternoon should theoretically be dollar positive, and it looks like at the moment that's what we're getting. We've got across the Forex markets, we've got the dollar gaining once more against all the majors, and this dollar index is just still, you could argue there's an element of consolidation over the past few days, but if you look at the sequence of higher lows, it actually on a net basis, it seems to be just gaining slightly still, positive on the dollar, putting a bit of pressure back on gold again and silver again, and it looks like it's going to be a strong day for the dollar. That sort of takes me on to my chart of the day, which is the Canadian Loonie, dollar CAD. And dollar CAD, over the past few months, really, you can see this sequence of higher lows and higher highs on dollar CAD. It's not a great trend channel, but you could argue that there is one in place there. And the correction that we've recently had over the past week seems to have now left a low at 112.77. Also, that's coming in on this 21-day moving average, which over the past few months has actually been a fairly decent gauge of support, although it was broken briefly. It has actually still played a fairly decent role, so it looks like we're now forming a new low. That's also coming around about that breakout level of support that came in around 113. So it looks like dollar CAD is beginning to start to look higher again. On the intraday hourly chart, this is the consolidation or the minor correction that we saw over the past week or so, just gaining support around that 112.80 mark and starting to push higher. If we saw it back above 114, that would be a break above the reaction, lower reaction high, and it certainly would suggest that we're regaining momentum back to the upside again. So yeah, the outlook, I believe, on dollar CAD beginning to turn more positive again. I think what we're going to see is further moves back towards this 114.66 high, and that is a multi-year high again. Another Forex pair that's showing multi-year levels on the with the dollar strength that we've seen back to 2009 now. So it's not a massive amount of resistance that you've got until you see this reaction high that we saw back in July 2009 at around that 1720 level. So it certainly looks like that dollar CAD is regaining the upside initiative. Look at these momentum indicators, very positive on the RSI and MACD lines, consistently above neutral, and it certainly looks like this dip has been another chance to buy on dollar CAD. Anyway, I wish you good luck in your trading today. Watch out for the US data this afternoon, retail sales and the Michigan sentiment, but I wish you good luck and I'll speak to you later. Thank you.